Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I'm going to describe about PAN rules in 2026, what has changed and what taxpayers should know. Introduction. The Government of India has introduced several changes in PAN related compliance and reporting requirements in 2026. The objective behind these changes is to reduce paperwork and simplify routine banking and financial transactions for ordinary citizens while strengthening the monitoring of high value transactions that may have tax implications. Under the revised framework, PAN may no longer be required for certain day to day activities, but authorities continue to closely track transactions involving substantial amounts of money, property purchases, insurance investments, and other wealth related activities. Understanding these changes is important for taxpayers, investors, bank customers, and other individuals who are frequently engaged in financial transactions. A clear understanding of the new rules can help avoid compliance issues and ensure smoother banking and investment experiences. Cash deposits above Rs 50,000 in a day. One of the significant relaxations introduced under the revised rules relates to cash deposits. Earlier, quoting PAN was commonly required for large cash deposit transactions. Under the new framework, the daily PAN requirement for cash deposits exceeding Rs 50,000 has been relaxed in certain situations. However, this does not mean that cash transactions are completely outside the monitoring system. Banks are now expected to focus more on aggregate annual cash deposits. If a customer's total cash deposits during a financial year cross prescribed reporting limits, the information may still be reported to tax authorities. Therefore, while immediate PAN related formalities may have been reduced, customers should maintain proper records and ensure that cash deposits are consistent with their declared income sources. Bank drafts and pay orders purchased in cash. Another relaxation concerns the purchase of bank drafts and pay orders through cash payments. Previously, transactions above specified limits often required PAN details at the time of purchase. Under the revised norms, the immediate requirement to furnish PAN for such transactions has been eased. Despite this relaxation, financial institutions continue to maintain records of significant transactions. If the cumulative value of such purchases becomes substantial over a period, regulatory reporting requirements may still apply. Therefore, customers should not assume that the transaction becomes completely anonymous simply because PAN is not required at the counter. Foreign travel expenses. The rules relating to foreign travel expenditure have also undergone changes. Earlier, specific PAN related requirements were applicable for overseas tour packages and certain travel related transactions. The revised framework has reduced some of these compliance requirements, making the process more convenient for travelers. This change aims to simplify travel planning and reduce documentation requirements for genuine travelers. However, high value foreign travel expenditures may still attract scrutiny if they appear inconsistent with an individual's declared income profile. Tax authorities continue to have access to various reporting mechanisms that track significant spending patterns. Foreign currency purchases. Purchasing foreign currency has become relatively easier under the updated guidelines. The requirement to quote PAN for certain foreign exchange purchases has been relaxed, reducing procedural hurdles for travelers, students, and business persons. Nevertheless, foreign exchange transactions remain part of the regulated financial ecosystem. Large purchases of foreign currency beyond prescribed thresholds may still be recorded and reported. Financial institutions and authorized dealers continue to follow regulatory guidance designed to prevent tax evasion, money laundering, and other financial irregularities. Hotel and restaurant cash payments. The threshold for quoting PAN in hotel and restaurant cash transactions has reportedly been increased from 50,000 to Rs 1 lakh per transaction as under the revised framework. This change provides greater convenience to customers making legitimate payments for travel, hospitality, and event related purposes. The revision acknowledges inflation and changing spending patterns while reducing compliance burdens for routine customers. However, individuals making frequent high value cash payments should remember that financial reporting systems continue to monitor unusual transaction patterns. Maintaining proper invoices and payment records remains advisable. Property transactions above Rs 45 lakhs. While several routine transactions have received compliance relaxations, property transactions remain one of the most closely monitored financial activities. PAN continues to play a crucial role in real estate transactions above prescribed thresholds, including property purchases and sales exceeding Rs 45 lakhs. Real estate transactions are considered significant indicators of wealth creation and investment activity. As a result, authorities require detailed reporting and verification mechanisms to ensure transparency. Buyers and sellers should ensure that all documentation is accurate and that tax obligations arising from such transactions are fully complied with. Large insurance premium payments. High value insurance premium payments continue to attract regulatory attention. Plan requirements remain important for substantial life insurance investments and premium payments. Insurance products are often used as long term investment and wealth management tools. Consequently, large premium contributions are monitored to ensure consistency with declared income and financial profiles. Individuals making substantial insurance investments should maintain proper documentation and be prepared to explain the source of funds if required. High value cash withdrawals. Cash withdrawals, especially those involving large amounts, continue to be closely monitored by banks and regulatory authorities. Although withdrawing one's own money is perfectly legal, repeated or unusually large cash withdrawals may trigger reporting obligations. The purpose of such monitoring is not to restrict access but to find access to funds, but to identify suspicious financial activity when necessary. Taxpayers should maintain transparency regarding the purpose and source of significant cash movements to avoid unnecessary scrutiny. Event-related spending, large cash expenditures associated with weddings, social functions, celebrations, and major events remain an area of regulatory focus. Such occasions often involve significant spending on venues, catering, decorations, entertainment, and related services. Authorities may review high value transactions connected with these events, particularly when expenditure appears disproportionate to reported income levels. Maintaining proper bills, contracts, and payment records can help demonstrate the legitimacy of expenses. High value purchases without PAN. Even when PAN is not explicitly required at the time of purchase, certain high value transactions may still be reported through various financial reporting mechanisms. Luxury goods, expensive consumer purchases, and other significant expenditures can come under scrutiny if they exceed prescribed limits. The broader objective is to ensure that major financial activities remain traceable and consistent with an individual's financial profile. Therefore, taxpayers should not assume that the absence of a PAN requirement automatically removes all reporting obligations. What taxpayers should watch out for. The revised framework signals a shift from transaction specific compliance towards data driven monitoring. Instead of requiring PAN for every large routine transaction, authorities are increasingly relying on aggregate reporting, digital records, banking data, and financial intelligence systems. Taxpayers should pay particular attention to annual cash deposits, substantial cash withdrawals, major property transactions, large insurance investments, expensive event related spending, and significant purchases. These areas are likely to remain under closer observation despite the relaxation of certain procedural requirements. Conclusion: the 2026 PAN-related changes reflect a balanced approach by the government. On one hand, routine banking and financial activities have been simplified, reducing compliance burdens for ordinary citizens. On the other hand, transactions associated with wealth creation, large investments, and substantial cash movement continue to be monitored through enhanced reporting systems. For taxpayers, the key takeaway is that compliance today is increasingly based on transparency and consistency rather than merely quoting PAN during individual transactions. Maintaining proper financial records, ensuring that spending aligns with declared income, and following applicable tax laws remain essential for avoiding future complications. Disclaimer: this article is intended solely for educational and informational purposes based on the information available on the official websites. Tax regulations, PAN requirements, reporting thresholds, and compliance obligations are subject to change through notifications, circulars, amendments, and government guidelines. Readers should verify the latest provisions from official government sources, the Income Tax Department, RBI guidelines, or consult a qualified tax professional, chartered accountant, or financial advisor before making any financial or tax related decisions. The author assumes no responsibility for actions taken based on this information without independent verification. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.